Hi, I am Chirag Mehta, Senior Fund Manager, Alternative Investments at Quantum Mutual Fund. Today, we're going to talk about a very interesting product offering and a very interesting topic called ESG. So, what is ESG? You would have seen many ESG funds launched recently. Quantum launched its offering on ESG in July 2019. But what is ESG per se? ESG is a short form or stands for environment, E for environment, S for social, and G for governance. So these three, what does it mean and how does it impact your investments? So if you see of late, the environmental or the social or the governance factors have become very, very important when you look at your investments. Governance has been for years a very important topic or a very important consideration for your investments. But increasingly, if you see climate change, for example, it is having an enormous impact on the economy and the companies that you invest in. And therefore, it needs to be considered while you make your investments. So if you think climate change is for real, the impact of floods, famines, or heavy rainfall and flooding that we have seen of late is having impact on how the companies operate their business. Are they ready for those calamities or not? So climate change is having enormous impact. It needs to have important consideration on your investments. There are regulations unfolding on this front, and they are unfolding very rapidly. Therefore, it is important that your companies that you invest in are geared to meet those regulations going forward. Otherwise, they will have to pay a heavy price going forward because if they are not ready. Uh, Climate change, for example, what kind of pollution levels the company has, what kind of waste management practices company has, all this will have a much important bearing on the investments that you make. Environment increasingly is becoming important, like for example, water. Water is becoming very, very scarce commodity. And therefore, if the company doesn't have good water stewardship, it will have to pay a heavy price going forward. So all the environmental considerations are getting more important day by day. Second is social factors. How does the company engage with all the stakeholders, be it employees, be it customers, be it shareholders? Shareholders is largely come in the corporate governance in terms of how they engage with them, but all the other stakeholders like the employees or the vendors or the customers that all are related to the company's operations are becoming an important element, and how the company engages and handles or takes care of all the other stakeholders is very, very important, especially when it comes to employees. Employees are a force that can help your company transform rapidly with the changing times that we have. And if you do not take care of your employees, it will be difficult to have that trust within that organization and foster innovation that is required to lead ahead to the next level of growth. So employees are very, very important. When it comes to employees, what are the labor practices the company has? What are the kind of safety measures that the company has in its plans? So all that is becoming very, very important from an employee perspective, right? Second, many think that social is only to do with CSR, corporate social responsibility, where the norm says that the company has to spend about 2% of their profits on CSR. But it's not only CSR, how the company does spend that and in what things that they spend. Many companies do not kind of spend towards helping the marginalized sections of the society, which is an impact that the company will have going forward. So you need to see all these issues. For example, product and data security issues have become very, very important. How does the company handle customer data? That is increasingly becoming important day by day. And when it comes to governance, the G aspect, it has always been very important for companies to have good governance practices, how it treats its minority shareholders. Is it treating the promoters differently and minority shareholders differently? Those companies are not bankable for the long term. What kind of board independence do they have? Is the board really independent? Or does it have friends and families in board as independent directors? So all these things will have a bearing on the investments in the long term. And if the company is geared towards good practices when it comes to ESG, environment, social, and governance, then the company is a sustainable company and it will have good impact in the long run in terms of the way it shapes up its operations, the way it kind of does well and leaps towards the next level of growth. So all these factors, if you see, are non-financial in nature, but it does have a big bearing on the valuation of a company. So if the company is not geared towards mitigating the risk in these areas of non-financial factors like environment, social, and governance, it will someday down the line face repercussions or face issues in handling these things. And therefore, if you are invested in such companies or not geared for it, they will have to pay a price. So ESG considerations are becoming very, very important. It is becoming a norm to have imbibed these ESG factors into your investments. Profitability, revenues are not alone the important factors only. These things can have much more larger impact and can erode the profits that the company is making today. So have ESG as the core in terms of when you look at companies. It is very, very important to have these non-financial factors as well, along with looking at profitability and revenue streams that the company has. So these factors are becoming important. Therefore, ESG funds that look at these factors into and take them into consideration are an important way in which you can make your long-term investments in equity markets. When you look at these companies, these are truly sustainable companies, right? And when it comes to sustainable companies are geared for the next level of growth. They foresee the challenges that are coming. They foresee the regulations that are unfolding, and be prepared today for that next things that are coming through. And therefore, when those things unfold in terms of regulations or be it any other thing, these companies are geared for that beforehand, and therefore they will move ahead of competition and therefore gain market share. So these companies usually are seen thriving over cycles, and they benefit from their preparedness to mitigate all the challenges that they face. And ESG is not just about risk mitigation. It is also about tapping in the next opportunity that comes for these companies. So it's not just risk mitigation, but it also looking at whether the company is geared towards tapping into the next opportunity that's coming its way. So ESG has become a very important element when it comes to investments. Who should invest in ESG funds? All those who are looking to bank on sustainability as a driver of long-term return, and therefore look at companies that will deliver in the long run. At the same time, what one would do is avoid tail risk, right? When you have a poor company who is not looking at ESG factors, will someday down the line, pay a penalty or maybe not be able to survive the threat that's coming to their businesses, right? Therefore, you avoid tail risk when you invest in such ESG companies. And there is more in terms of evidence that is piling up in terms of ESG does work, right? So if you look at ESG funds or ESG indices, they have sort of done well, better than the traditional market cap weighted normal stock market indices that we know as. So if you see the Nifty ESG index or the MSCI ESG index, all have done better than their traditional counterparts, the normal stock market indexes that we usually follow, be it the Nifty 50, BSE 30, Nifty 100. It is done better than those indices. So ESG, there is a good evidence that ESG does work. And if you look at the track record of the Quantum India ESG Equity Fund, it has been a short track record. It's been there since July 2019. So it's just about 1.5 years or a little more than that. And if you see in this phase, we've already seen a good market cycle, right? Because of COVID, we saw a sharp downward move in equity markets and then a sharp rebound in equity markets along with the pickup in economy. So if that is enough in terms of a market cycle, and if you look at the performance during this full phase of market cycle, the fund has done significantly better than the normal stock market indexes that you tend to follow, right? Even in the downward spiral that we saw because of COVID, the fund did well. And even in the rebound, the fund has been doing well. So that gives you enough confidence to say that ESG does work, right, in the real world. theoretical is one thing, but you have to see a real world experience, and that the real world experience tells us that ESG does work for you as investors. So bank on ESG, bank on sustainability as a driver for long-term return, and you will see, you'll reap the benefits of banking on this sustainability, and therefore not only avoid the tail risk, but also do well in the long run. So invest in ESG and achieve that triple bottom line that we are looking at. It is good for the environment, it is good for the society or the community, and it is good for US investors in terms of profits. So it achieves the triple bottom line of planet, people, and profit. So invest in ESG and invest in sustainability to drive that long-term returns that you're looking for. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.